Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the weekly time frame with the volume profile of this range over here, where we had clear support resistance in this area, right? Support, resistance, resistance, and eventually we closed a weekly candle inside, increasing probabilities to move to the point of control, and now closing candles above the point of control is increasing probabilities to move to the value area high at 49.5k. Now, we have been in this range for, of course, a very long time in the past, so arguably there's good probabilities to also be in this range once again before we get a clear direction to either the upside or the downside. Another thing is that we never retested the value area high. We closed inside, we moved to the upside. We actually never went back, so it can also be interesting to move to the upside over here. Maybe even have a little bit of an excursion outside the value area high, but then move back in once more to go to the lower edge of this range before continuation in a bullish scenario or a dump in the macro bearish scenario. Now, if you then go to the 12-hour chart and look at scenarios that can get us to 49.5k, then this is the more bullish scenario where we do expect eventually a drop in 4, but then another push to the upside in a wave 5. Here we have a couple of 1-2s, then we have the wave 3 to the upside where we also see volume spikes on the chart, so that is also what they like to see. Then we have a 3 and a 4 in blue where wave 4 in blue retraced to the price action of the white wave 4, which is what you like to see, as a wave 4 of a higher degree likes to retrace to the price action of a wave 4 of a lower degree. It's not a rule, it's more like a guideline. It's something that you see very often. Now currently we are then looking for a 5-wave structure to finish in this blue 5 and therefore then the green wave 3. And after green 3 we're then looking for a green wave 4 to the downside before then a wave 5 to the upside, another impulse. Now this wave 4 over here has a lower degree wave 4, which is the blue one, because inside the green wave 3 we have a 1, 2, 3, 4, 5 wave count. The price action of this wave 4 in blue is basically the green box, and if wave 4 in green likes to retrace to the wave 4 of a lower degree, it would mean a retracement between 38k and 34.7k. If we take the fibs out from the low of the green 2 that we made over here to, let's say, a high around, what should it be, 47k, we don't know exactly, right? And we toggle on the wave 4 target area, then the most common Fibonacci retracement levels are the 0.236, the 0.382, and the 0.5. And you can see the 0.5 is still in this area. Most commonly is the 0.382 and the 0.5 for a wave 4. Now, if this move to the upside is going to get too high, then you'll see that eventually the 0.5 is only going to be at the higher end of the box, and the 0.618 is also entering this area, which is an invalidation for a wave 4. So that is something we have to keep in mind. In the more bearish scenario, we're already working on the green wave 5. So after the wave 5 is finished, we then expect a bigger retracement to the downside, where we do have the potential to then move to the lower edge of the range once again. If we zoom in to the 6-hour chart here, the latest impulse to the upside, we are looking for this yellow count, and this is then the sub-degree count to the upside of either the green wave 3 or then the green wave 5, right? So here we then have wave 1, wave 2, potentially wave 3, 4, and 5 finished. And I say potentially because there's also the probability that this yellow wave 3 is not yet finished, and we are in this white sub-degree count where you have a 1, 2, 3, 4, 5 in white, which then finishes a 1, 2, 3, 4, 5, so the 3 in yellow, then wave 4 in yellow, then wave 5 in yellow. More about that in a second. So here we then have potentially 1, 2, 3, 4, 5. Now the reason I do like to talk about this is because of time. If we look at time, what we like to see is a wave 4 being longer in time than wave 2. That is most common. The fib times that you see are taken from this high to this low to the high we have at the moment, meaning that if this is the yellow wave 3 here, then wave 4 is at the moment longer than wave 2. And that is why this yellow wave 4 at least has some probabilities at the moment compared to the white one coming up. So the next push to the upside could be potentially the yellow 5, after which we then expect a bigger retracement. because after the yellow 5 we are looking to finish the green 3, or we're looking to finish the green 5 to eventually get a bigger retracement. Now of course this wave 5 can also move to the upside quite nicely. We'll look at resistance areas in a second, but at least it then would be a potential final push. Now for this wave 4, the fibs are taken from the low to this high, target area 43k to 40.8k, invalidation 39.9k. We tested the 0.236 here, so that is very valid. Now the longer price is ranging here, the higher the probability it's a yellow wave 4. And that has to do with the white count that we have over here, which is a subdegree count. So in yellow we have 1, 2, 3, 4, 5, and then in white 1, 2, 3, 4, 5. So working on this wave 4 in white here. Now the target box for this wave 4 in white, taken from the low of 2 to the high of 3, 0.23605, 43.2k, 41.2k, invalidation 40.3k. We already tested the 0.236, which is absolutely fine, right? Could go all the way down here, but what you also see is time. For this wave 4, the fib time is taken from the high to the low, put on top of this wave 3. You can see we have passed the 3 fib time, meaning that so far this structure is now more than 3 times longer than wave 2. That is not a problem. It is still something that can definitely happen in a wave 4, but if it really gets to like the 5 fib time, that is when probabilities for potentially the yellow wave 4 here are really going to increase, because a 5 fib time is not too common for a wave 4, with the 5 fib time here sitting on Tuesday the 12th of December, 5 a.m. in the morning Central European time. Now in this scenario you would then expect the end of a 4, move up for a 5, and then after that 5, which then is the end of your wave 3, you're going to expect another 4 and then another 5 to the upside. And that is the big difference between the two, where if we get a push to the upside, we're going to be looking for a white 5 or a yellow 5. So either it's the last push or then the second last push to the upside. If we then look at the local structures here on the chart, then one of them is this flat scenario here, where we are looking for an A, B, C, 3, 3, 5 wave structure, wave A complex, wave B a zigzag, and then wave C to the downside, a 5 wave structure in a contracting diagonal. In this scenario, wave 1 is already finished over here, wave 2 is also finished, and wave 3 is also finished. Now in an ending diagonal, all of the waves have to be zigzag structures or double or triple zigzag structures, but they can't be an impulse. They have to be 3 wave structures, which is also the case in 1, in 2, in 3, in potentially 4 finished here as well, and then looking for a 5 to the downside. Now I got the invalidation of this scenario on top of the wave 2, which is the ultimate invalidation. Let's say if price would do this, it invalidates this particular scenario. What you can also do, however, is take a trend-based fib from the low of 1 to the high of 2 to the low of wave 3, and then toggle on the 1-to-1, because preferably in a contracting diagonal, wave 4 is shorter than wave 2, which is also the case at the moment. As you can see, wave 4 did not hit the 1-to-1. It is shorter than wave 2, so that would be a small invalidation, but the ultimate is this one over here, so that's the one that I like to have on my chart. But eventually we are then looking for still a wave 5 to the downside and look for prices below this low. Now what is interesting is that just below that low we do have the golden pocket over here. Just below that low we have the golden pocket, and also over here we have a target box. So a little bit of additional support, 43.4k to 43.5k, and below that we have 43.2k to 43.3k. Now in a contracting diagonal, wave 5 is not allowed to be longer than wave 3. So if we take a trend-based Fibonacci from the high of 3 to the low of 3 to the current high of this wave 4, then you can see this wave 5 is not allowed to hit this 1-to-1, which is sitting at 43.4k, meaning that this support area is going to play a very important role. And that support area is also the value area low of this range over here. Together then with the golden pocket in this same area, little low for a little bit of liquidity, another low of course. So this is an important area of support, as we don't like to see price hitting this 1-to-1 over here for then a 1, 2, 3, 4, 5 ending diagonal, and we're gonna look for continuation to the upside. If we have a look at the bullish scenario, then you're looking for this to be the low, and we're looking for an impulse to the upside in then a wave 1, where you're then going to be looking for 1, 2, 3, 4, 5 at least, finishing a 1, then a wave 2 to the downside, preferably also seeing some local bullish CVD divergences, and then we're going to be looking for higher prices to come. Of course, in this scenario, we want to see the contracting diagonal invalidated, right? We want to see this high being taken. Arguably, there is also a diagonal in this structure over here to the downside, but by all means you want this to be the low, as you're going to be looking for upside for a continuation of the trend. So you're going to be looking for another impulse to the upside, which then leads us to some of the resistance areas that we have towards the upsides as well. First of all, the golden box here, 45.2k to 46k, which also includes this monthly level, and just above the golden box, might actually have to extend it, we have a yearly level. Now these are quite well, rare, because you need a year to close to get a yearly level here. 46.2k, important level on the chart as well. And then we have the blue box over here, which is sitting between 47.2k and 47.5k, and then the other blue box 48.8k to 49k, and then we get into the 50s here, 50.7 to 50.9k. Not to forget that the value area high of the high time frame is at 49.5k. So these are the levels above at the moment that are very interesting to keep an eye on. Of course, over here you see the levels on the chart in case you want some of these on your chart, and also here the high time frame naked point of controls, weekly naked, monthly naked there as well. So some interesting levels absolutely towards the upside. If we look at this range that we are in here for a while now, then as you can see, we are ranging around still the point of control, as we have done throughout the weekend over here. Value area low as explained inside the target box, value area high 44.2k. If we look at the CVD divergences, we do have bullish CVD divergences. We have a higher low in price, lower low on the CVD. That is a bullish CVD divergence here more locally. Higher low in price, lower low on the CVD. But even if, there we go, this is the chart. It wasn't refreshed nicely. Higher low in price, lower low on yellow, but also lower low on blue. So that's a bullish CVD divergence. If price comes down once more for the diagonal structure, I expect these bullish CVD divergences to still be there. And also, if we are looking for a wave 1 to the upside and eventually wave 2 and looking for continuation to the upside, it would be very nice to get a bit of a wave structure to the upside, a retracement, and then also see some local bullish CVD divergences with this low and the higher low that price is then creating. If we then look at the probabilities of the different scenarios, then on the medium time frame and the low time frame, 12-hour, 4-hour, 1-hour, we are still looking for price to move towards the upside, as we are looking for this being a wave 4. So at least one more push to the upside in a wave 5. But more locally here, when we look at the range, we have the value area low before. We just missed out on hitting the golden pocket, taken from the low to the high as well. We have the potential contracting diagonal scenario. So locally, currently, based on Elliott waves, the higher probability scenario would be this diagonal, as long as it is not invalidated. If it is invalidated, we are going to be looking for a move towards the upside and potentially a wave 1, 2, maybe some proof of support, bullish CVD, RSI, stochastic, candlestick charts, whatever it is, market structure change, and we're going to be looking for price to move up. But this is definitely an area of interest over here for potential bounce, ending C, looking for price to move towards the upside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.